Bob, I am going to start with you. After those record closes yesterday for the S&P and NASDAQ, just to categorize where we're at in terms of markets and the role IPOs have been playing.
Well, I think the important thing is earnings are holding up. They are not going down. They're getting better. I think we're going to be flattish, not down. We have the Fed behind the stock market, essentially. Let's be honest about that. And China is improving, and Europe at least is stabilizing. There's your four factors. And look at the IPO market. Lyft is now the outlier. The IPO rush since Levi Strauss has been successful. All the big ones since Levi Strauss have been to the upside. Zoom, PagerDuty, Tufin Software, Pinterest, all up. Lyft is not. You can debate, is it because they had big losses? Is it because the pricing was wrong? Whatever. That's the outlier. I think the big thing right now is we're talking about a $100 billion year for IPOs this year, and this could be the record year. We've been waiting for this since 1999. Who knows if it'll actually happen, but so far the valuations are excellent. And we may even be able to raise a market cap of $700 billion, $800 billion, we don't know. But I think this is a good shot right now at a record year.
Paul, how would you categorize IPOs? I mean, do you agree with Bob? And how much of this is going to depend on some of the names that haven't gone public yet?
Well, I think it's obviously a rush of excitement and activity that's going on. I think you've got three underlying factors here. One, despite the rhetoric out of Washington, the world is getting wealthier. You've got China, you've got India, Russia, Latin America, the United States, all these countries are getting wealthier. There are greater and greater pensions. There's more and more money going into retirement. That money has to seek a return. And so I think that's one of the things that's been pushing the market along for quite some time. I definitely agree with Bob. We have, at the very minimum, an incredibly accommodating Fed, if not a politicized Fed. So I think that's a different issue for a longer time. And then I think a third factor in this is that, I'm glad Bob mentioned 1999. I think people have short memories. I remember what it was like in March of 2000 when, the stocks that we were all in just flipped upside down overnight, and it took 15 years for them to come back. And, that's the situation that we're facing here, on the downside.
Yeah, Phil, in terms of the Fed, we've talked about the role that a more dovish Fed has been playing in the markets move higher, public markets move higher here in the U.S. since the start of the year. But it also, this quest for yield by investors has led to what has been just a tidal wave of capital in the private markets as well, as some of these names do go public this year. What do you think of valuations? I guess, how do private market valuations get rectified with public market valuations?
Well, I think it's a very good thing that the conditions are right for a lot of companies to go public, because I think there's a moral obligation for especially tech companies, the companies that are shaping our world, to be public companies, to have the transparency, the accountability that entails, and to get companies to go public, you need the right conditions. So I think that's a very good thing. The flip side of it is the time scales that public markets used to make decisions are completely incompatible with the timescales at which tech companies operate. When tech companies make plans, it has to be for years, sometimes a decade in the future. Public markets aren't responding to things that are years in the future. They're responding to things that are, seconds in the future, maybe a quarter if you're lucky. So that's kind of the blessing and the curse of IPOs. It's very much a good thing for society that more and more companies that are shaping our society are becoming public and more transparent and more accountable. On the other hand, now they have all this pressure to do things in real time, which is not at all the way that a good tech company can plan or operate its business.
Yeah, I think Phil's point is well taken. The conditions are absolutely perfect right now. You had a guest 15 minutes ago, not Phil or Paul, who said that there's so many IPOs coming this year that it could put pressure on the stock market. There's no historical evidence that that's ever mattered at all. If you look at the numbers we're talking about raising $100 billion into the stock market. The U.S. equities market is a $35 trillion market. $35 trillion. We're talking $100 billion. That's 2 or 3%. The market can easily absorb absorb those kinds of numbers. Remember, in 1998 and 99, we had an enormous bull market on the top of the greatest IPO run of all time. It ended in 2000 because we were going into a recession and everyone decided they didn't want money-losing companies. But it did not end because there were too many IPOs out there. So I am not at all worried about the size of the IPO raise this year. Phil's right. It's time for these companies to go public. There is an eager audience for them out there.